My name is Miles, and I'm one of the directors of our real estate and construction tech programs. And today, before we jump into our startups, I just want to, the overview of what we're going to talk about beforehand is I'm going to give you guys a quick overview, a little bit about, for the people who are new here, what Plug and Play is and kind of what we're trying to do. I'll touch lightly on the specifics of real estate and construction tech program. I'll then invite one of our members from our China team to talk about what we're doing over there in China. And then finally, we'll have Saeed talk, make a few remarks, and we'll pass it to our keynote speaker. So without any further ado, let's jump right into it. Oh. I know these are for the... Well, I can go ahead and start while they get the slides up. So the first thing I want to start off with is Plug and Play. And what exactly is it? Okay, I'm not sure. But Plug and Play, essentially what it is we are the world's largest global innovation platform. And we aim to do one thing. Thank you. So our goal is to create the ultimate startup ecosystem. And we do essentially three things. We invest in startups, we run a number of acceleration programs, and we're global. Our headquarters are located here in Silicon Valley, but we have 26 offices worldwide. And really, our main goal is to find, invest in, and accelerate great startups. And we like to say that we can provide all the things that are necessary for a startup to do well, regardless of what stage that they're in. So for earlier stage startups, we can do things like provide logistical support, and then we can also provide things such as mentorship, HR, legal, and accounting support as well through our service providers. But really what's at the core of our business and what's driving all these activities that you're seeing is investing. And unlike traditional accelerator programs that focus mainly on earlier stage startups, we invest anywhere from pre-seed all the way to Series B. We're very active investors, and so last year we actually made 260 investments, 100 of those out of the United States, and the rest of those outside. And if you take a look at our portfolio in the United States, about 1% of our portfolio has exceeded or has got to unicorn status. And so we invested in Dropbox back when there were 2 people. We did the same thing with Lending Club, and SoundHound and Garden Health are actually some of our newest unicorns. And about 10% of the rest of our portfolio has exceeded 100 million in valuation. And one thing that I think could be, to me at least, is one of the most interesting parts of our business model is our corporate innovation platform. And so really, over the last 6 or 7 years, we've been adding to this corporate partner network, which today is over 200 partners strong. And they're actively coming here to Silicon Valley to work with startups that are either solving specific business challenges or helping them learn about a new interest area that they may have. And so we started with brand and retail back in 2013, and this program took off. It did really well. And so what we did is we continued to replicate that model in lots of different spaces. As you can see here, we went into fintech, food and beverage, and today our 2 newest programs are going to be our real estate and tech program that I'm involved with, as well as our Enterprise 2.0. And what you see here is just a overview of our partners overlaid on each other. And the takeaway here is that, even though we may have separate verticals, many times, let's say you're a real estate owner, but you have real estate in the retail space. You're not just thinking about maybe energy savings, which might be a real estate play. You might be thinking about retail technology also. So the takeaway here is there's a lot of overlap between our corporations and our programs, and we like that. We like to have our corporations work with all of our programs. So real estate tech, I'm going to just touch briefly on what do we mean by real estate tech and what are we doing exactly. So when we say real estate tech, it actually breaks down to 3 different areas. And the way I think about it is the planning and design before the building's actually been built. Then you have the construction phase as it's being built. And then once the buildings are already built, the asset management as well as the smart building technologies. So we're looking at each of these areas and figuring out, okay, how can technology be applied to make the owners and the operators or the people within these areas do what they do already better? And you'll see some of that later with our startups. So today, we have 15 partners around the world. We started in March, and so I'm very proud of our progress so far. And what I want to show here is a breakdown of all of our partners by geographic location. And it's pretty obvious to see that we're very strong in Asia. We've seen a lot of traction there. And so right now what we're trying to do is make a stronger push both in Europe and the United States as well. And so on that note of Asia, I'd like to invite my colleague Bella to talk a little bit about what we're doing in China. Thank you, Bella.
Thank you so much, Miles, and thank you, everyone. And I'm Bella Zhang from Plugon for China. I'm really honored to be here to tell a little bit more about the real estate tech industry in China. So as we all know, China is a large country, and it's the largest country by population and third largest by land mass. And right now, we all know China is one of the largest community of startups in the world as well. So we know China is large in real estate, but I want to give you a little bit perspective of the data here. So in 2016, we got around 7.5 trillion US dollar invested in new construction projects. So that is equivalent to the nominal GDP of Japan and India combined. And also we got around, in the residential real estate space, we invest in 1.4 trillion US dollar in 2016. That means that is equivalent to the GDP of Australia. So the market is really large. But there's a problem that we don't have much innovation in the space previously. So why is that? We think one of the most important reasons is the relatively high margin in the real estate market in the previous years. As you can see from the cost structure right here, the efficiency-sensitive cost was not a significant portion of the overall cost here. So wages are only like 2.4% of the total cost, compared with 15.5% in the States. So the companies didn't have much motivation to involve in the new technologies to improve the internal efficiency of the new projects. And another possible reason is the lack of innovation infrastructure previously. So we don't have that many venture capital firms, private equity firms in China previously, and we don't have much incubator accelerator programs in China to help the startups to grow. But that's the previous, and things are changing right now. So with a lot of internal shocks and the environment changed a lot in the Chinese market, one of the most important factor was the restrictive housing policy in China, which controls the price of residential housing. And secondly, we have the Internet Plus initiative by Chinese government that helped a lot of companies in the technology sector and the software sector to grow in the market. And thirdly, the Chinese government nowadays have more restrictive, strict policy in environment control and quality control that motivate the company to do more in their sustainability aspects. And thirdly, demographic changes in the Chinese society lead to the increase in the labor cost. All of that changed the industry, then it changed the conduct of the players in this industry. And what we can see from the market is nowadays companies pay more attention to technology. They invest into the new companies, and they pay attention to the emerging technologies in this sector. And what we know about the real estate tech industry in China nowadays, so we have two key data I want to talk about. So first one, among the 47 fastest growing cities in the world, 20 of them are in China. And another data was really impressive to me is among the $4.8 billion invested into the real estate tech market, 2.8 of them was raised by the Chinese startups. So Chinese real estate technology industry is really growing, and we have a lot of startups in this space. So we are actually becoming a leader of many real estate technology verticals and catching up in a lot of others. So two key aspects that I want to talk about. One is KOL marketing, and another is a smart city. So KOL marketing, you may know it as influencer marketing, which means basically the company hire the influencer on social media such as YouTube, Instagram, Weibo, or WeChat to promote their product or services to the customers. It is really popular in China right now. The market is around 12 billion US dollar right now in China. And a lot of our corporate partners in the real estate space have seen this trend, and they're adopting to the KOL marketing method to help them to promote their real estate products. For example, the vacation houses or the rental houses in the Chinese market. And we have one specific company called Numeric. It's doing very well. We introduced them to a lot of corporations, and they're running pilot projects in China and overseas. And another quite interesting area in China is smart city. Among the 1,000 pilot projects about smart city in the world, 500 of them are in China. The government strongly supporting the smart city initiative. We have run this pilot project with Country Garden and Panyu government in Guangzhou, and we're helping them to build a smart town located in Guangzhou. So as you can see here is the chart of the map of the Chinese startups in the real estate space. So we have a lot of startups growing in every single sector right here, all the way from the security, face recognition, to smart meter, energy management, IoT solutions, hardwares. So we have good startups, and they are willing to collaborate with the partners from China or outside from China. And I want to take the chance to thank all of our partners in the ecosystem with us. We have Wanda Group, Wanke, Longfo, White Horizon, Country Garden, Futureland, and also we want to welcome our newest partner, Hong Kong Land, to join us this month. And also want to especially say thank you to all of our guests today. We have a special group of guests from CURA, and today we have Mr. Gao from Mingyuan Yun, which is one of the leading software company in China. And we have Mr. Fang from Zhongfang, and Mr. Chen from Jingdadi, and Mr. Zhou from Ping An Real Estate. So thank you everyone for coming, and we are very excited to have everyone join the Plug and Play China Real Estate ecosystem. We want to be part of your China strategy. Thank you so much.
Bella, thank you very much. And we're going to have a quiz right now, so if everyone can pull out their pens, please. We have some questions on those. So moving on. So before I pass this over to Saeed, I want to make a few remarks based on kind of what we've seen over the past 3 months working with our corporate partners. So as of late, I've kind of become very interested in the history of real estate, understanding how it's kind of changed and how regulations have changed the way we interact with it. And so before I go into kind of what we've seen as of late, I just want to talk about the quick stint on the history. So if you think about the way we as humans have interacted with real estate, it's changed, it's always been changing, and I'll give you some examples. So if you think about before the 1880s, high-rises didn't really exist. And so in the 1880s, you saw the invention of steel-framed buildings, and this is where buildings above a couple floors were this is where it was invented in Chicago. And so at that point is when you could actually have very tall buildings. Then in the late 1900s, or late 19th century, then that's when you saw the beginning of dense urban environments, because industries needed to be near banks, they need to be near their lawyers, and everything needed to be near itself. And so that's when that kind of started being created. And then after World War II, there was a boom to the suburbs. So people started moving away from dense environments. And then finally, as of late, what we're seeing is a resurgence of movement back towards the urban environment. And so the takeaway here is that we as humans have interacted with the real estate has kind of always been changing. And so if we look at some of the changes today, there are a lot of factors into why our interactions are changing, but two that we want to touch on at least are socioeconomic and technological changes and kind of what they're doing. So one of the first things that I'll just briefly touch on is how socioeconomic and technological changes are reducing switching costs and making it easier for people to make changes in what they're doing, and then also how technology is redefining visibility and accessibility. So starting on the first one with switching costs, traditionally if you're an owner of an asset, let's say a house, and you want to sell that, it's a big process that you have to go through. So you put it on the market, then you have to go through multiple showings, then you have an inspector come in, and this process could go on for, maybe not here in the Bay Area, but traditionally it could go on for a while. And what companies like Opendoor and Nested are doing is they're allowing you to go onto their platform and say, okay, I have a house that was built in 1982, has 5 rooms, 3 bathrooms, and they will provide you with a quote on instantly. And then they'll send someone to your house later on to verify that everything that you said was correct. And if that was the case, they'll buy your house based on market analysis that they're doing to verify that they can make a profit on it. And so the implications here are that from the owner standpoint, you're now provided with potentially instant liquidity, and this is shortening the sales cycle. And I think the takeaway here is that it's almost moving towards an on-demand model with housing, because if you don't like the house you're in, it's a lot easier now to sell it and make a switch. And the second thing I'll touch on is redefining visibility and accessibility. And so I think most people are very familiar with Airbnb and the model that they've provided. Essentially, before Airbnb, if you own a small house in, let's say, France, there wasn't like a centralized marketplace that you could put that on to find users. You could have put it on, like there were websites that exist, but what Airbnb did is it created a centralized market. And so now there's a platform that people can go on and search around the world and find your location. Companies like Spacious and Breather are doing similar things. So what Spacious does is if you're a restaurant owner, during off hours, they allow you to turn your platform into a co-working space. So let's say between 9 a.m. and 5 p.m., Spacious will come in, they'll put internet and coffee, and now people can rent out your location, and you can make revenue during hours where you normally would not be able to. And Breather is doing something similar where if you're an asset owner and let's say you have meeting rooms or rooms that are not being used, Breather can come in and say, okay, maybe a study group or a corporation wants to do an off-site meeting. They can now come in and rent that room from you. Breather will come in and outfit it, make it look good, add internet, and so now you can get revenue from these places as well. So I thought these were some interesting things to think about because they're taking away some of the traditional defenses of real estate. And so I think so the takeaway here is that these platforms are providing accessibility to what are traditionally low-yield assets. So the takeaway here are 3 things. So what should you be doing or what should you be thinking about? The first one here is, I think you should be thinking about, and I think this can be abstracted away from just real estate, is that what are the competitive advantage that you already have? So are you the owner of are you the largest owner of industrial real estate? Or whatever your advantage is, you need to think about, okay, what can I get out of this? Do you have access to data that other people don't have? These are things that you should be thinking about and how you can leverage that to your benefit. Seek deep differentiation. So this is moving towards understand who is your client and understand them better. What are they looking for? What value add can you provide above the basics of what you're already doing right now? And the last one is don't ignore the innovators. And I think this one's important. Just because innovation is happening that may not be affecting your bottom line right now, I think it's important to study that are in your space, study the technologies and understand why are they doing what they're doing, because they may not be affecting you now, but maybe later on they will be. So these are my takeaways. And before, if anyone has any questions, again, my name is Miles. I'm one of the directors of our real estate program. If you have questions, please feel free to find me afterwards or email me. And before I pass it over to our keynote speaker, I'd like to invite our CEO, Saeed, just to say a few words. Thank you very much.
Thank you so much, everybody, for being here. Welcome from me. You know, as you can imagine, this real estate division is about 3 months old compared to some other verticals we have. I always remember my father talking about real estate, and he says there is 3 important things in real estate. 1 is location, 2 is location, 3 is location. And quite frankly, because real estate is very capital intensive, it takes time to build a house or a hotel or an office building. It really is the capital that does the work more than the technology and innovation. And we think that is going to change. Specifically, I want to tell you a story. Google moved to our building when they were 3 people. When Larry and Sergey and Omid reached about 40, 50 people, they came to me and they say, Saeed, we would like a campus for about 300 people. We would like to have a cafeteria that we serve food. We want open space. And quite frankly, going from 40 people to 300 people, I kind of said, what you guys are smoking? You know, like this is very big growth. But just day before yesterday, I had a meeting here in the hotel with David, head of Google Real Estate. And specifically, Google is growing so fast in the Bay Area that they have close to 45,000 people. There is a housing problem in the Bay Area, so they are building 10,000 units for their employees. So the way real estate has been done before is going to change. Quite frankly, any corporation, 10 to 15% of their operating cost is real estate. And now with this open spaces, new work environment, agile people moving between different cities, everything is going to change. In the residential world, everyone, specifically in America's biggest purchase in their life, their biggest asset class in their life is their home. So it is incredibly important for anyone who owns a home or finances a home to make the right decision. What, as I mentioned to you, please allow us, because this real estate division is 3 months old. We really started it because of Takenaka and Tokyo Land and Wanda Group and Country Garden and some of our friends from around the world, including Prologis, the largest warehouse owner in the world, said there is not a real platform where real estate innovation can thrive and grow. So we hope with your help, we build the best innovation platform in real estate in the world. And then if we find a new technology that could be implemented, we would love you guys to do a quick pilot. Like also Simon Property, David Simon is involved with us. Uniball is a big real estate company that just bought Westfield. So we will have residential, commercial, retail, all on the platform. But we are open to the ideas you guys have to build the best innovation platform in the world, first in Silicon Valley, China, and Europe. So again, we are not the expert. Specifically, the team Plug and Play has, but we depend on entrepreneurs to show us the future. I said this earlier, I had the chance to invest in Airbnb when there was 3 people and they had 600 homes. Now they have over 2 million homes. And I consider them the biggest hospitality company in the world with truly new business model. So we want to find technology, business models that we can be part of this real estate tech or property tech into the future. So welcome. I hope you will find the startups interesting, but this is a journey we hope to go together. Thank you.